All right, Larry, we are recording and it's great to see you. And as we were just saying to each other, two times in the space of short amount of time because you came across the BTC Pro.
Yeah, I sure did. I really enjoyed that show. That's the right kind of show, as I think you would agree with me, right?
Yeah, absolutely. And we even got to hang out next to each other and sign books. And you were signing the big print, which we have
Yeah,
right
thank you
here.
so much. Yeah, we
I
had.
think I think you even sold out. I think you put
I
everybody else.
did. I didn't have all that many books. Amazon made it very hard for me to get books to Prague, but I think I got maybe 150 books or something, and I sold them all. So that's good. Yeah, it's all. And more importantly, I met a lot of the people behind the NIMS on, on Twitter. I mean, so I've got all these Twitter friends that I haven't met in person, and a lot of them came up and said hello, which is really great. I mean, it's hanging out with the plebes. It's just so much fun. And the Bitcoiners are great.
Yeah, that is a lot of fun when you get to meet people and you're like, oh, you're XYZ, whatever it is on Twitter.
Exactly. Exactly. Yeah.
Yeah, very, very, very fun. Right. Okay, Lauren, you're here and you're ready to ask the first question.
Yeah.
So to preempt it, we were in the car just about 20 minutes ago, and I was explaining who you were and a little bit of your background and how you've been, well, we'll get into it, but investing pretty much your whole career.
Yeah.
So Lauren wants to know this.
What was the worst investment you ever made?
Oh boy, there are lots of them, Laura. Like
Well, we know the best one.
Mm,
where do I start? The best one is Bitcoin, and will prove out to be Bitcoin. Oh, I don't know. I was a venture capitalist before I became a Bitcoiner, and before I became a sound money. Well, I was a sound money person on the side, but I was really a venture capitalist, and so I invested in so many things that did not work, and that's really the nature of that game. And probably more recently, I would say I've invested in some gold mining projects that didn't work, just horribly messed up. One of them was out in California, a company called Rise Gold, where the environmentalists prevented us from building what would be a very highly profitable and good mine for the community, completely safe, completely environmentally friendly. But that doesn't really matter in California because there's no rule of law there. I would say probably the most recent one that's seared in my memory was in 2011. If to bring some monetary history into all of this, in 2000 they really started printing money, and gold was at $260. And in 2011, gold was at $1,900. So in that period, and that was, turbocharged by the great financial crisis in '08, where it was, four or 500 and it went, well, no, it was more than that. It was 700, 800 at the time, but it went up to 1,800. And so, 250 to 1,800 is a pretty good investment. I was there. But I was silly and I thought, well, this is great. The currency system's going to fail. Satoshi was over doing his thing. I wasn't even aware of it. The currency system's going to fail. I'm just going to hang on to all this gold. And because, 1900 is just the beginning, we're going to 10,000 because they had QE1 and QE2 and QE3, and they had ZERP and everything else. I thought, well, okay, I'll get rich off this gold. And my wife and I even, moved into a bigger house and, spent some money in anticipation of thinking how great it was going to be. and then what happened is they changed the rules again. They started paying interest on excess reserves. They didn't let the added money get out into the economy and create the inflation that they thought it would create. And gold plummeted from 1,900 back to 1,000. And my fund was down enormously in the same time period. It was horrible. So the whole 2011 to 2015 period was really a difficult and searing period. It was probably the worst investment call I'd ever made. And it was because I couldn't really see what was going on the other side of the curtain and all the levers they were pulling to manipulate things. And so it cost me a great deal of money. But it also hardened my resolve to recognize that sound money is what's going to win, and sound money is important. And during that window, I found Bitcoin, and so there was a silver lining to all the pain associated with the badness of that one particular investment and believing in gold at the time. And a lot of people ask me about gold today, and some Bitcoiners say, "Well, gold's going to go down," and they're right. Bitcoin's going to demonetize gold. Bitcoin's going to outperform gold, but in fiat nominal terms, gold's not going down. Fiat's going down much faster than gold and Bitcoin. And of course, Bitcoin will outperform gold, but those who don't want the volatility of Bitcoin, gold's probably your best second choice. So, but that was a very humbling experience for me, Lauren.
Hmm.
It caused me to kind of rethink everything, and like I say, there was probably a silver lining in there. I found Bitcoin. So
I remember those days, those frothy gold days.
were you there? Were you there at the time? Were you involved in that area?
Yeah, well, I was on foreign exchange broking desks, but
Yeah.
with on our desk we had the gold options as well, and
Right.
yeah, so that's where all the eyes were looking, all the attention shifted there. Everybody wanted to be the next gold broker, and everybody wanted to be the next gold trader.
Right.
And the retail market was frothy as all hell. All of the financial advisors, their lackeys were on the phone pushing you different funds. You want to
Gold
get in gold
stocks.
mining funds? Yeah, you want to get in gold stocks? Yeah,
Yeah. No, it was.
everything was gold.
Yeah, it really was. It got overheated like so many things. And it's fundamentally, we've now exceeded those highs, but that was also, 10 years ago. So
Mhm.
all these markets are cyclical. And yeah, it's humility. I mean, if you're not humble as an investor, the market will deliver a dose of humility to you. At least that's been my experience, having done this for 40 years. And so I try to frame everything in terms of probabilities. Nothing is for sure, but you can stack the odds in your favor.
100%. Right, Lauren, thank you for your question. Did you have any follow-ups or are you done?
I think I'm done, but
Okay.
thank you so much for answering my question.
Thank you, sweetie. That was a great question.
Thank
You're
you.
lucky to have such a squared away dad. You guys are going to be in a very good position as you grow up, because you're going to see this whole thing unfold.
Mhm.
Yeah, thank you.
Well, thanks for your
I need
question.
to grab my laptop, so I'm still.
Okay, all right, this one.
No.
Okay, you want to take that one as well?
Thank you.
Thank you. Smart girl. Pretty. How old is she?
14.
There you go.
Growing fast.
Yeah,
I was
probably.
thinking, Larry, actually back to the first time we met, and that was back in Madeira,
Yeah.
June. So just over June 22, just over 3 years ago. That's wild. That's when, the Free Madeira thing was being formed, and
Yes.
Andre was putting all of that together, and we had such a
Yes.
great time.
I remember it well, and probably most pointedly, what I remember is we were walking down to some event or thing we were going to, or we were going to take an elevator down to the beach or whatever, and you and I were walking next to each other, and we started talking about Sam Bankman-Fried, and we both looked at each other and said, there's just something not right with that guy. He's just that the guy's got to be a fraud. I mean, there's just no way that it just doesn't add up. He's not worth $8 billion. His coins aren't worth it. He's a shit coiner, blah, blah. And we both looked at each other and said, yep, it's absolutely certain that thing is going to blow up. And that was it. We just kind of ended the conversation. But it wasn't that far after that what we had both been discussing actually came to be true. Right?
And it was the same weekend as well that we were all spending with each other that the wheels started coming off at Celsius. And
That's right.
That
That's
whole thing
exactly right.
unraveled.
Yeah, that shitcoin scheme unraveled. Yeah. So, and it's so amazing to me that there's so many shitcoiners still around. I mean, you see some of the big Bitcoin people doing podcasts with a few of them, which is kind of disappointing to me. And then recently I tweeted something. I think I did a pod where I talked about how they're all going to zero. And I think the guy who did the interview had a pretty big shitcoin following, so he retweeted it. And boy, oh boy, I mean, there are a lot of shitcoiners still and crypto bros still around, because I just got flamed. It was great. I mean, I managed to block like 200 people in an hour because, I just got flamed by the XRP crowd and the Solana crowd and all of it. I mean, it's just like the ETH crowd. It was like, oh my God, these people still believe. I mean, the Doge crowd. I mean, how can Doge have any meaningful market value? I just don't get it. It makes no sense to me, but there it is. It does. So
BSV is the one for me. That's
which one?
BSV, Bitcoin Satoshi Vision,
Oh yeah, that
because
one too. Yeah.
Craig was proven to be a fraud, and he has fled the country. But yet, if you ever meet a BSVer, they're still so like like the programming they've been through is so bad that they can't see it, and they've got all of these cope arguments, and it's just wow, you guys. Like,
It is.
I'm
Wow.
sorry. Yeah,
I
I
didn't
just
realize Craig had flown the country. What he didn't want to pay the fines, or is he at
well,
large and anonymous, or where'd he go? Didn't we?
I hadn't realized either until I had a couple of guys on the podcast the other day, yet to be released. So Mark Hunter and Arthur Van Pelt, and
Mhm.
together they're writing a book about fake Toshi. And this book it's taken over their lives for the last couple of years. And there's going to be three separate books. They're trying, because it's so like the information that they keep unturning just keeps
Yeah,
coming in. So they're going to take you through like an arc of like the journey of how it all came to be.
right, right.
And yeah, it was those guys that informed me that yeah, he's gone, he's hopped town, which is the classic way charlatans work, right? I mean, if you
Of
think
course.
about in the US, for a perfect example over on, especially go west, young man, right? You've got the charlatans, the snake oil salesman,
Yep.
the horse rustling folk. They would
Yep.
get run out of town as soon as they found
They
out, and
literally
then
do get run out of town once people figure them out. Yeah, that's right.
oh, we need more of that. We need more
We
people
certainly
getting.
we certainly do. I mean, shaming in the public square, right? I mean, it's
Mhm.
yeah, they're I mean, sadly, whenever there's something where there's a lot of new money coming into it, you're going to attract grifters, and you're going to attract con men. You're going to attract false prophets, and there's enough of that around Bitcoin. In fact, I spent a piece of the book talking about that, trying to kind of address the fact that because as you know, I come from the gold community, and so gold people are pretty good at sniffing out bullshit.
Mm.
And a lot of them saw all that, and they were like, "God, I'm not touching this thing. Look at these grifters." And my response was, "You're right. You're right. Those people are grifters, but don't let that obscure the technological development that Satoshi created. Satoshi created a new technology. It's an enormously important development. And yeah, you got, people who are fakes hanging around trying to make money, but the development's real, and you can't ignore it, or the cost of ignoring it's going to be high."
Yeah, absolutely it is. Well, Larry, let's get the listeners up to
Yeah, where do you want
speed
to go?
well,
Yeah,
I want to go all the way back because in your book, I told you this in Prague. I really loved like the personal touches,
yeah,
getting to know the real Larry. You can
yeah.
go on macro podcasts and talk about this, that, and the other thing as much as you like, but it's the real details, the personal details that I think draws people into.
Thank you. Yeah, I did it that way because people like stories. People watch movies that are stories, and people don't read textbooks. And there are much better books on Bitcoin that have been written than mine. I mean, Safe's is one, Lynn's is one, Jeff's is one. But there didn't seem to me, I thought there was a missing spot in the marketplace for a book that kind of told one person's story and had enough interesting angles to it that people would get hooked. And then my book agent read it and said, this story about you at Harvard Business School, we got to put this right in the front because this is going to hook them. And I've had a very interesting sound money life, and it's kind of all led up to the writing of this book. And I'm 68, and this is kind of frankly, this will probably be my last public act. I mean, I wrote the book. It'll stand the test of time, I hope. I mean, I hope there will be a big print in 5 years. I'm pretty sure there will be. And I intend to, kind of pull back a little bit more from the community, not be as involved. And there's not a book two coming, and I'm not selling newsletters, and I'm going to kind of glide more into retirement and focus on, family, friends, and fitness. And so, so I laid it all out there, and I also thought that, it's very hard for people to know in the investment world who's honest and who's not. And so, I showed a lot of warts in that book, my successes and my failures. And I thought, well, if you're willing to do that, that shows a certain amount of strength. And then I think it builds a certain amount of credibility. And so that's why I did it the way I did it.
That's why I liked Lauren's first question, why she come up with that straight away, because in the book
Yeah.
you talk a lot about the failed investments.
Oh yeah, I've made a ton of mistakes, and that's why I caution people. I might be wrong about this too. I mean, I don't think I am, and I think I look at Saylor, I look at all the other bright people hanging around the hoop, and I'm pretty sure we're all right. But nothing is certain in this world.
So let's take you back because you talk about when you're a young man. And I think there's
Yeah.
something else that happens to us Bitcoiners. When we find Bitcoin, we realize where we were predisposed to find it in a past life with something that happened when,
Oh,
it's like
maybe.
a touch point. So there was a story in the book about you growing up and something happening to the family business. Did you
Yeah.
want to take us through that and what that
Yeah.
was
Just
like to witness as a young man?
yeah. Yeah. It was very, very traumatic. This was and I'm probably older than most Bitcoiners. I go to these shows. I talk to people about 2008, and they say, "Well, I was in grade school or I was in high school."
Yeah.
And so in 1979, so Nixon broke the gold standard in 71, which is the wrong thing to do, and they had massive inflation throughout the 70s, as everybody knows. And in order to get it under control, this man that all the Keynesians call a hero, Paul Volcker came in as the Fed chairman, and he jacked up rates very, very high, higher than they'd ever been, actually, 20% on the Fed funds rate. Kind of, we're going to defend the dollar and we're going to crush inflation.
So wait,
Um,
he hiked it 20% or
he hiked
20% was the
he
rate?
hiked the rates to 20%.
To
The,
20%.
the nominal interest rate on borrowing money was 20% a year, like a
Wow.
credit card, just under the credit card rate today. Right. And my father was running a retail furniture business in Ann Arbor, Michigan, and he carried a big inventory of furniture that he put out on the floor. People would say, "Oh, I like that couch, deliver it." And I can't recall the dollar figures, but they were substantial. And of course, he didn't own the furniture. He didn't have the money always to carry the inventory, so he'd borrow to carry the inventory. And so if he was borrowing at 5%, well, that was one number. If he was borrowing at 20%, that was 4x the number. And I'll never forget. And also at the time, the economy was kind of going through a downturn and recession. People weren't buying as much furniture, and I'll never forget it. I mean, it was very, very scary, watching him suffer through that because he was very afraid he was going to go bankrupt as a result of this Fed policy move. And he wasn't the only one. I mean, there was, farmers and other people who had borrowed money. I mean, there was a guy, there's a great story of a guy who was a farmer who drove his tractor into Washington, D.C. with a shotgun and, intended and tried to assault the Federal Reserve building, to go take a shot at Volcker. I mean, this was, right. I mean, what I'm getting at is I don't think the Fed always understands the implications of all of the things they do. To them, it's all just Keynesian theory and, oh yes, our models say we should be at 20% or at 0%. Or nobody knows what the right interest rate is. The right interest rate should be set by the market. The book talks about that. It's supply of savings against the demand for investments. And we all know that. That's classic theory. But the Fed doesn't operate that way. I mean, the Fed is the one area of our economy that's still a government controlled price, which makes no sense. I mean, Russia had government controlled prices, they failed. So, they do it. And what they don't necessarily understand is, their downstream implications. There are real people behind those numbers. My father, got sick. I recall, we were eating, tuna fish sandwiches and peanut butter and jelly for dinner because I mean, buying meat was not something we were going to be doing in those conditions. I mean, it was tough. And, I remember seeing him scared. And,
How old were
that
you?
what's that? I was in 79, I was 20. Well, no, 22. I was born in 57.
Right.
So yeah, so I was 22 years old. Yeah.
So a young man, old enough to know exactly what's going on and pick up what more
Right.
than pick up on the signals. Like,
Yeah, like holy shit, Dad. I mean, are you going to fail? Is your business going to fail? And he's like, I don't know, maybe. I mean, it was terrifying to be frank. I mean, there's a guy who's my hero, and he's talking about he might go bankrupt. And I'm like, what? And of course at the time I didn't understand everything I understand now. I didn't understand how he got there, but
Mm.
now as I piece it all together, I'm like, holy shit, that's what did it. And I mean, the flip in the same story in the book I talk about too, the related event was, my grandfather ran the same business in 1929, got all the wrong signals from the Fed, which is we're in a boom in the roaring 20s because they kept rates too low and they inflated a bubble. Borrowed money to increase the size of his business. Bang, the stock market collapse hits and the credit bubble bursts, and he spends the next 10 years begging the bank not to foreclose on him. And my grandmother and grandfather were badly, badly scarred from it. They always talked about it. They were always, I mean, she was one of those people who would, she kept the wax paper after she'd used it. She'd keep the tinfoil after she'd use it and reuse it. I mean, these were people who, I mean, she told me about how, coffee was a luxury and, biscuits were standard fare for food in those days. I mean, it was tough. And same thing, I mean, driven by misdirected Fed policies that created the Great Depression. I mean, the Fed tries to claim that, they're saving us from another Great Depression. That's bullshit. They created the first one. So, so there's that. And then, of course, it came my turn, which on a much smaller scale, but I'm running a fund in 2008 and I've got the housing thing correct. And I'm short all the housing stocks and, I'm short all the, financials that have lent to the housing stocks. I know they're all over levered and going to go bankrupt. And then they changed the rules, and they banned the short selling. And so they took away I mean, I would have had a great year and they took it all away from me. So it's just over and over again. So I mean, I've seen this pattern. I know how this works. I know how this impacts people. And I've seen my family suffer from it. And so, I figured somebody's got to just stand up and say, hey, it's not right. I mean, I wrote the book, Princey, because I felt like so few people understand what the real root cause of this problem is. So few people truly, truly understand it. And, the brainwashing, the Keynesian brainwashing has just been so extreme that, I mean, it's like, I'm absolutely convinced I'm onto something that's completely true. And yet imagine if the whole world didn't know it. I mean, I guess, I mean, I'm sure, Copernicus and Galileo had the same feeling. It's like, no, you guys are idiots. This is not the way it works. I can prove to you that the planets are going around the sun. Everyone's like, no, that's not true. It's just not that way. And that's how this is. I mean, this is just so broken. This monetary system is just so broken, and it has been broken for a long, long time. And so it feels normal to everybody, but it's not. It doesn't have to be. So, therefore the book, right?
Yeah, well done, mate. Well done for writing.
Thanks.
I'm sure you've had a lot of good feedback. So we'll go to the opening scene because so you had your grandparents, family business, passed down to parents, family business. Then you decide you're not going to go sell furniture. You're going to go on to Wall Street, or was that the path?
Yeah, pretty much. I mean, I went to business school and Wall Street, and then into investment management. Right.
Right. Okay. And then fast forward to actually no. Before we get to 2018 and the opening scene in the book, what was that like for you? Like you're on Wall Street in what, like the 80s, 90s?
Yeah. So when I say Wall Street, it was actually kind of a subset of Wall Street because I was actually a venture capitalist. I spent a couple of years on Wall Street as a financial analyst before business school. And I went to business school and I got out and I got in the venture capital business. So it was finance and it was investment management. But what it really was investing in small technology companies that were private and sometimes public. But we had funds under management. And the theme we were playing, and I was at two different firms throughout my career. The theme we were playing was this technology is going to change the world. And, the IBM PC was introduced in 81 and I started in the business in 82. So, we were buying disk drives and graphic cards and I mean, you name it, Dell Computer, all these great businesses that sprung out of, a non-digital world, we participated in, and it was fantastic. I loved it. It was, and it was honest too. I mean, you put your money in, the business would get better. You'd sell it, when it had matured, et cetera. I mean, there wasn't a lot of sleight of hand in it, although there was some at the fund management level and some of the bullshit some of the venture guys pulled with their limited partners. But setting that aside, in general, the process of finding a person who had an idea, had a business that was growing, they needed capital to grow it. You gave them capital, they grew it, and then later on it went public or whatever, it got sold, and you made a profit. That was beautiful. And I did that really from 83 till, into the early 2000s. And kind of my last cycle was internet. I got very lucky. I found the internet in 93 or 4. I bought a bunch of private internet companies. They went on to go public, made a ton of money, did really well. But then actually in 2000, 2001, I could feel that was a bubble too. That even though the internet was very real, was going to continue to go on, the price of the stocks were way, way, way ahead of themselves. And so I kind of moved away from that, retired from the venture business and started managing my own money, with a theme of just trying to do growth at a reasonable price. And I did some interesting things. I went to India, bought a bunch of the cell phone manufacturers in India, or cell phone providers in India when it was growing very rapidly. I was just looking for growth at a reasonable price, which is the name of my fund, the GARP fund. So, and then when the bubble emerged in the financial area, GFC, that became very obvious to me in 06 and 07. And so I was like, okay, well, I'm going to do half of this stuff as growth at a reasonable price. I'm going to do the other half. I'm going to short these things because this is going to blow up. And so I was where Michael Burry was, but I didn't even know what a CDS was. I mean, I had no idea all the great levered, sophisticated things that he was able to buy. I didn't have a broker swap dealer agreement, any of that kind of stuff. I was just shorting the stocks. And it worked. It was working great. I was short Bear Stearns. That worked in March of 2000. Of 2008. I was short a lot of the subprime companies. They all went down. That worked. But the big one was obviously in the fall. And of course, I was short them and I was doing very well. And then they changed the rules, made me cover my shorts at a loss. So the year, turned out to be a crappy year for me, but not a big crappy year.
How did they do that? How did they just all of a sudden say, no, you can't short? Like
it was just an SEC. It was an SEC directive. So, I mean, if you Google, SEC ban on short selling 2008, and you'll see the press release. I think it was September 21 or 22. I think it came right after Lehman failed, and they realized they really had a shitstorm on their hands. And this was before TARP, and TARP was soon thereafter. And they're like, oh my God, this whole system is going to implode if we don't stop this. And they also realized that some smart hedge funds, and me plus others, were shorting these things. And they just said, hereforth, we are putting a ban on short selling of all financial stocks in the United States. And if you are short, you need to cover them right now. And so, as you can imagine, what that did was for a very brief period of time, all those stocks went up very, very rapidly. And so, I might have had a profit in something and I'd lose half or all of that profit as it rallied. And then, of course, once all those shorts had covered, they went back down and a lot of them went to zero. So they would have been shorts that would have been highly profitable. But of course, we weren't there anymore because they changed the rules. And, I mean, this is a similar thing, just as a data point. There was a time way back in time, it goes back quite some time now, where the Hunt brothers tried to corner the silver market. And they did, and they pushed the price. And, the CME and the SEC, they literally changed the rules and said it's illegal to buy silver long. Just categorically, it's illegal to buy silver long. The exchange is only going to accept sell orders. And sure enough, that caused the silver price to collapse. And so, I mean, they did it with GameStop, right?
Yeah.
I mean, there's a great movie about it that came out that showed how Ken Griffin intervened and they got the company to issue some more shares. And, they got Robinhood to shut down at the right points in time and so on and so forth. I mean, Wall Street was cornered and they pulled the card where they changed the rules.
That one is so disgusting because, the Robin Hood users were just your retail guys. Like they were.
Absolutely.
And retail had won. It was done.
Absolutely. There were more shares short than there were shares outstanding. I mean, they should have driven Ken Griffin into bankruptcy. He should be bankrupt. And instead he's worth $40 billion. And he holds forth on stuff on Twitter. Whenever he holds forth on Twitter, I just blast him. I mean, he's like this guy, Lloyd Blankfein, who ran Goldman Sachs, who comes out with all these policy suggestions and so forth on Twitter. And I always just blast him. I say, dude, shut the fuck up. You were bankrupt and we bailed you out. We don't want to hear what you have to say. I mean, these people play by two sets of rules. So,
yeah.
And therein lies the problem. I mean, these two sets of rules allow them to get bailed out. That bailout comes as a form of printing money, which they benefit from because they can ride the inflation wave. And the rest of us pay more money for groceries. I mean, the one thing I will say is this is a sophisticated fraud, Princey. I mean, this is not, it's not for, I mean, like when I wrote my book, I handed it to my wife and she started reading. She said, hang on a second here. What's the Federal Reserve? My wife was very smart, but this is just not her area. She's an author. This is not her area of expertise. And she says, you got to explain this. And so, they've created a system that really benefits them. And they've wrapped all these words around it to make it sound like it's in all of our best interest, but it's really not. It's rigged in their favor. And, we got to call them out on it. We've just got to call them out on it. And that's what the book tried to do.
I totally agree with you. And like we've said here on this podcast just today, like the money system is broken, but it's not.
Yeah.
It's working as designed, Larry. It's working.
Well, yeah, okay. That's a fair point. Yeah, very good point.
But that's the
From their
dark
point of view,
side of
from
it.
their point of view, it's not broken at all.
No, it's running along tickety boo.
Yeah,
It's
oh, that's a great point.
absolutely working as designed. They
Absolutely,
can do
you're
whatever they
absolutely
like, whenever
you're
they like, and affect the markets and create the bubbles and then pop the bubbles. But like the great Wall Street crash of 27, 28, whenever it went down,
29.
completely
Yeah.
engineered,
Oh,
totally
absolutely.
engineered.
Well,
But
and that's why, that's why we had the Cross of Gold speech and everything else. I mean, the banks have been very smart, very sophisticated. They get all the farmers into debt. I mean, and even Thomas Jefferson said this, one of his famous quotes, through the process, if you're a financier and you can control the money and you can inflate and deflate at will, you can get everybody else off sides. And so, you crash everything and asset prices fall, and everybody who's levered up goes bankrupt and loses those assets, and then you buy those assets for pennies on the dollar and you end up getting rich. I mean, an amazing, more modern case of it is Jamie Dimon is a billionaire based on stock options that he issued to himself in 2008. JPM was right at the edge of bankruptcy. They gave him an enormous slug. I mean, how do you become, being the CEO of a bank, how do you become a billionaire? I mean, that's just unheard of. That had never happened before. And yet, if you issue stock options to yourself at a very low valuation when it looks like the world is ending, and it's not because you're tied in with the government, the system, you reinflate, you will end up silly rich, and he has. So it's a very broken system, and the hope here is that the book will go viral and will get enough people to understand this and support sound money and honest politics and the alternative. And I know I mean, there are people who have accused me of being kind of Don Quixote here. I mean, whether this is going to work or not, I don't know, right? But I mean, Satoshi gave us a really good weapon. So I think the answer is I'm highly confident it's going to work. The timeline, we may have to be more patient than I'd like to be, but because history shows that human beings do gravitate towards the best ideas. I mean, maybe not instantly, but eventually. And I haven't found the large logical reason why Bitcoin is not the best monetary idea out there. I just haven't found it. And I think those of us who are in it know it, and those of us who know it, our numbers are growing every day. And so, we'll go through the Gladwell adoption curve, and eventually everybody will know it. And then, of course, it'll just be money. And your kids and my grandkids will talk about things. Well, that car costs 30 Satoshis or whatever the heck it costs. I mean, it's funny. Saylor talked about $21 million Bitcoin in 21 years. I'm like, yeah, okay, that may be true. And that's all great. But what's gasoline going to be? It's going to be $1,000, a liter. I mean, right, we don't know. I mean, and the problem is the measuring standard we're using, which is fiat currency, is getting inflated so damn rapidly. It's almost like some of the stuff has no meaning, right? It's hard. So
yeah, and therein lies the beauty of the meme: one Bitcoin is one Bitcoin.
Exactly. I mean, and it can't get inflated. We know exactly what it is. I mean, the fact that for the first time in human history, we have an uninflatable source of money. That's such a big deal. It's huge.
So being a gold guy as well, you'd have, and to take us back to the end of the 1920s again, when America was on its absolute knees, you're seeing, you're seeing starvation, you're seeing all kinds of just complete and utter destitution, people completely destroyed by what they did at the back end of that decade. And then you go into the new decade and you've got all this hype. You've got FDR coming in with this big new deal in 33. And the first thing he does when he's voted in is he signs the Emergency Banking Act. And then the second thing he does is sign Executive Order 6102, because he can do that under the Emergency Banking Act, which he had just signed in like a week before, and steals everybody's gold, for want of a better word.
Yeah, that's exactly what he did. Yeah, and the Supreme Court doesn't call him on it. Yeah, no, it's unbelievable. I mean, we've got, the founders, what did Ben say? A republic if you can keep it, right? I mean, the founders set up this document to try and limit the powers of government, and probably better than most other governments in the history of the world, it's done so. I mean, I still prefer America to, China, Korea, Russia, a lot of other places, but a lot of the original founding fathers' principles have been badly compromised, badly, sadly. And, having said all that, if we wipe the monetary slate clean, we might get a chance to rewrite the Constitution and reinforce some of the core, principles that were in the original document. Or maybe we evolve towards a system that's much more like Switzerland, where, do we really need these enormous nation states that can have nuclear weapons and bombers and aircraft carriers and all this? I mean, maybe we can devolve into a lot more, smaller regional governments. And the funny thing is, I mean, war is a really funny thing. I mean, I don't know many sane people who really want to go somewhere else and kill other people. I just don't know. I don't, like most sane people just want to live their life, raise their family, die peacefully, et cetera, et cetera. And yet there are some people who decide they want to kill other people. And of course, if they, migrate to the top of a big power structure like, Hitler did, they can do it. And, we got to stop that. And, one of the things that enables that's the broken money, because they can do it without paying for it. And if they suddenly had to pay for it and we all had a vote on it, I think the vote would be kind of an overwhelming and a resounding no, we're not doing that. So.
Yeah, it's a very sick part of the whole fiat game that
right.
You can.
Yeah.
How many people are employed by the militaries all around the world that can be shipped over? They're trained to kill other human beings. Like, that's the most inhuman. Like, that's there's a primal instinct in you to do no harm.
Correct.
In clown world,
if you're healthy, I mean, there is. I mean, I don't know what psychiatrists would say. There's some portion of the public that are psychopaths. I mean, there are some. There are some people who are sick. There's no doubt about it. And frankly, that's why we do need, in my opinion, we do need some government. I mean, I want sick people to be thrown in jail. I want rule of law, and I'd be happy to pay 10% of my earnings or my net worth to have that occur. But it's gotten so that we're so far beyond that 10% level that it probably would require. I think most of the world. I was talking to a guy when I was in Prague show in Italy, from Italy. I said, I want to move to Italy. He said, no, you don't. I said, why not? He said, because at the margin, I pay 65 cents of every, euro I make to the government. I was like, oh my God, that's crazy. It's just crazy.
Yeah. I think most people would be shocked to figure out that, come the end of their, working career, their working life, they've probably handed over anywhere between 60 to 85%. And it's just unreal. And then
I don't know if it's that high, but I know it's got to be 40, 50 when you consider all the added taxes. I just, it's gross. It's really gross.
So let's go to, you're sitting at this conference at the Harvard Business School. Have you got the?
No, it's good. I'm
you're
fine.
Good. Okay, you're sitting in. So what? Yeah. Why did you go to this conference? And what happened? What made you stand up and challenge the guy?
Well, I'm the Mark Baum character, right? I mean, so I went to the conference. Let me tell you. Let's set the scene. So the conference is Harvard. It's 2018. So it's now 10 years after the GFC, which occurred in 2008. And I think the conference was billed as, a review of 2008. What have we seen? What have we learned? And the speakers were, Paulson, Geithner, Larry Summers. Bernanke was not there, but and a few other Harvard professors and econ types. They were all up on a panel. And the best way to describe it was kind of a victory lap. They were kind of like, look, 2008 was an incredible event. We didn't expect it. Obviously, there were regulatory errors that happened that allowed it to occur. But goddamn, didn't we do the right thing? We came in here and we were the committee to save the world, and save the world we did. And we acted courageously and aggressively. And this, it's just, and, that literally they were making speeches similar to that. I'm paraphrasing, obviously. And they'd get resounding applause, right? 400 people, resounding applause. And I got to give Geithner credit that he had the balls to ask this question, but he figured, well, what the heck, let's have some fun. And he got up and said, is there anybody here who thinks that we didn't do the right thing? And nobody's hands went up, so I put my hand up, and by the way, as this whole thing was going down, I was just getting sicker and sicker. Like, you guys are a bunch of fucking frauds. You didn't do the right thing. I can't believe you're sitting here. Not only did you fuck everybody over with your response to this thing and hurt the middle class and all the people who lost their houses, et cetera, but you also, here you are, you have the gall to come here and try and brag and pound your chest. I mean, like as a redemption tour. And I think at that point in time, Geithner and somebody else might have just released a book talking about, and Bernanke's The Courage to Act was already out and all that kind of stuff. So, so they were, it's a victory tour, and I couldn't bear it. And I just said, fuck it. Somebody's got to say this, right? And so I raised my hand. They called on me. I stood up. I said, hey, no, you didn't do the right thing. There were a lot of other solutions. People lost their homes. People lost their jobs. You let the whole bubble occur on your watch, and there were 10 other ways to deal with it that would have been incredibly fair. And you chose the one that, bailed out the guys who did it. And, I would have proposed something different. And if you read my book, I've got my proposal in there in detail. Let's not go through it here because it's too long. But, and as you can imagine, Geithner was taken aback, and he said, well, what you're proposing is Old Testament justice, an eye for an eye. And I was like, dude, this isn't, about justice. I mean, this is about just basic human fairness. And, and this isn't Old Testament. I'm not poking your eye out. I'm just suggesting to you that the people who committed the crime should be held responsible for it. Anyway, I got drowned out. They moved on to other questioners. It was very clear they didn't want to hear what I had to say, and that was fine. I expected nothing less, but I did make my point. And I had a lot of hateful stares at me. I had a lot of people glaring and taking snide remarks as I went out to coffee. But as I said in the book, there were a handful of people who came up to me and said, dude, that took fucking guts, man. And I agree with you. You're right. You're absolutely right. And they needed to hear it. So, so there's that. And I just figured, I'm just not going to let this stand. I mean, if somebody who knows what happened and knows it's wrong can't stand up and say it, in America and with freedom of speech, then what's the point, right? And so I said it. But, the impact is quite low in terms of their thinking, I'm sure.
So on that panel, let's get people up to speed in case they're just names flying over their head. Hank Paulson, he was at Goldman, I believe, during the time.
He was the CEO of Goldman, and he was the Treasury Secretary during the GFC. Right. And so he was the guy who initiated TARP, which is the Troubled Asset Relief Program, where they borrowed $700 billion. And he was on his knees in Washington, D.C., begging Nancy Pelosi to approve TARP. And by the way, the first time they put TARP out there, the Congress overwhelming, I mean, there was, thousands of phone calls to DC, reject this. It's a bailout of the bankers. And the Congress overwhelmingly turned it down. And then days later, the stock market fell 8 or 9%. By memory, I could be off by a little bit, very rapidly, one of the largest falls ever. And, it was very clear that if they didn't do it, the economy was going to melt down. And so, all the financial types leaned on all the Congress people and said, you guys don't have a choice. You have to do this bailout, or else, the ATMs aren't going to work and everything's going to melt down. And that's, by the way, what the financial class has always done to rip us off. It's like they've got a gun to our head, print the damn money so we can benefit. If not, I'm going to blow your financial brains out. And yeah, the inflation will hurt you later, but you don't want to have your brains blown out now. So you say, fine, we'll print the money. I mean, that's the game that got started when we put in the Federal Reserve backstop in 1913. And that game has only gotten more and more extreme, and the numbers are larger and larger as we go forward. So yeah, I mean, and it led to all kinds of distortions. One of my favorites in the book, and I want to mention this, I mean, because it just blows my mind every time I read it. And it wasn't just me. This was documented by Matt Taibbi of Rolling Stone. When that whole thing went down, the wife of the chairman of Morgan Stanley and borrowed $200 million, okay, non-recourse from the Federal Reserve at a low interest rate in order to buy distressed and troubled assets. And so what that meant was that if those distressed and troubled assets recovered and became worth $300 or $400 million, she was going to make $100 to $200 million. And she had to put up some money, a few million bucks. But and if those troubled assets failed, she'd lose the few million bucks that she put up. But the $200 million that she borrowed, the Fed would cover it, right? So this is just blatant corruption. And this is all, I'm not making this up. This is all detailed in Matt Taibbi, a great investigative reporter, Rolling Stone interview. He called it the Real Housewives of Wall Street, because it was actually Morgan Stanley's chairman and wife, and there was another senior Morgan executive. So these two women borrowed $200 million from the Fed, with no financial background. It's just like, what?
So obvious.
This is the system we're running. You can't borrow $200 million from the Fed. I can't borrow 200. The average citizen wants to borrow money. They got to go to these loan sharks called the credit card companies and pay 25%. And I'm old enough to remember how back in the olden days, there were usury laws, which prevented the credit card guys from charging more than 10 or 12%. So you couldn't get yourself into the debt hole that a lot of people have gotten into. And everyone says, well, they got to have that, so they take on riskier credits. Bullshit. Cap the interest rate at some fair level, and if the credit's too risky, then don't loan them the money. But instead, what they've allowed everybody to do is to get into a debt trap, just like the government's in a debt trap. And guess what? If you're in a debt trap, they own you. You do not have sovereignty anymore. You're a hamster on a treadmill, just trying to get that salary to pay that debt. And millions of student borrowers know it. Here's a good example. I don't agree with absolutely anything that what Elizabeth Warren says, except one thing I will say I agree with her. She said, "Hang on a second. You mean to tell me we're charging 6% on student loans, and we're giving money, we're lending money to Wall Street at ZERP at 25 basis points? Please explain to me why Wall Street can borrow at a lower rate than a student who represents the future of our country." She's got a point. She's really got a point. And the answer is that student doesn't have the lobbyists and the power and the money that Wall Street has to corrupt the system. So anyway, enough of a rant. But
it's so disgusting.
You hit on the thesis of my whole book, and yeah. I feel strongly about this shit, as you know.
Well, you brought up usury, and usury is a really interesting one. And in the same conversation here, we've already mentioned interest rates, and you were saying quite correctly that interest rates should be decided by the market. The fact that there is an entity out there dictating to us what the interest rate is absolute complete nonsense. But when you look at how so usury laws, for those that aren't aware, usury is the exorbitant charge of interest on borrowed money. Now, if you look at our current system, everything is pure usury because the money you're borrowing didn't exist in the first place. You go to a bank to get some money as a loan, they just print that, they just loan you. The deposit is the loan. They deposit the money in your account. And then you have to pay interest back on money that didn't exist. So It doesn't matter if it's 0.5% and you think you got a great deal. It's usury. And it's just so disgusting.
When people understand the advantage that the banks have against the average human being, it's mind-boggling. It's just absolutely mind-boggling. And how as a banker you don't end up wealthy? It's impossible because they've got the game rigged in their favor. So,
yeah, man,
it's a nutty system. Oh, hang on one second. I gotta let my partner's dog out. Hang on, son.
Yep.
There you go. Here you go, sweetie. Yeah. So. I have my business partner has a golden retriever.
Right.
Who's visiting with me.
Gold.
Yeah.
How have your gold bug buddies watched you? They must have been watching you closely. I'm sure some of them have come with advice of, it comes from a place of love, right? I'm sure. People
it does, yeah.
People that respect you and have known you for a long time have probably been in your ear like, Larry, you're losing your fucking mind with this Bitcoin.
Absolutely. I've had all of that. Yeah. And it does come from a place of love. And, I just try to explain them. And I understand their arguments. Probably the one that I think the smartest ones have hung on to, okay, I will say, is that something this volatile can't be money. And I flip it and say, yeah, you're right. The dollar really is volatile. One Bitcoin is just one Bitcoin. Now, the dollar price of Bitcoin, well, that's all over the place. And you're right, the dollar is not money. But that's probably the last remaining argument to get knocked over with probably the smartest of my gold bug friends. The other arguments, one of the biggest ones, the other big ones that got knocked over, I think, relatively decisively, and although it could change, was the government's going to shut this thing down. And that was in 2018, 19, okay, that's, I hear you. But we got an ETF, we got a strategic reserve. Now, if Trump fails or if the red team fails in 3.5 years and blue team wins, they might take another crack at coming after crypto or coming after Bitcoin, big taxes, taxing the off ramps, outlawing self custody. I mean, a lot of things. I think hopefully the horse is so far out of the barn they won't get anywhere on that. But I do worry about it a little bit.
Yeah, my worry is going back to Executive Order 6102.
Well, that too.
If you read the order and some of the literature leading up to it, FDR was blaming and pointing at people and calling them hoarders, right? So that's what we are, right? We're hodlers, we're hoarders, and they could just pull the same narrative bullshit again.
Absolutely, and we're profiteers, and we're taking advantage of the existing beautiful fiat system and the Keynesian model. And by the way, they have some really nice honeypots now. I mean, you can be sure that if they called up Fidelity and they called up BlackRock and they called up the big ETF, pools and said, guys, the law has now changed. Send us those Bitcoin and cash all your customers out at the last Bitcoin price. They'd have to comply. I mean, it would be if it were the law of the land. Now, and the interesting thing there is it doesn't necessarily, I mean, I've had this discussion on other pods. I think it's an interesting discussion that in theory, the monetary policy of the country was determined by the Constitution, where, Article 1, Section 8, gold and silver money, et cetera, et cetera. But in practice, executive, the chief executive, the president, has actually driven the monetary policy. Lincoln did it with greenbacks, which he shoved through. The Congress put in the Fed, but then Wilson approved it. But Roosevelt did things just kind of unilaterally, right? 6102, revalue gold, et cetera. And then Nixon did it again in 71. We're reneging on this promise to pay you gold for your dollars. And so, it does get a little scary. So Team Blue is now in charge. Hey, we think gold and Bitcoin are hurting the underlying safety and security of the dollar. We think that the capital gains on those two assets should be taxed at 60%. Furthermore, we even think we should seize them, and you can't own those assets. We're gonna bring them in. If the voters were all like the New York City voters who just voted for an avowed socialist, this guy went to Bowdoin, right? He's from an upper middle class background. He went to Bowdoin. It's one of the best small liberal arts schools in the country, and yet he's a socialist. I mean, good luck with socialism working. That's not going to work. But when I look at an AOC or I look at a Bernie, and I think they're complaining about what's wrong, and they're right. They've got things are broken. Okay, they've got their solution's just wrong. Do you know what I mean? And so, so that's why it's really incumbent upon all of us Bitcoiners and other people and Austrians and so forth that we've got to educate these young people that yes, you're right. The system is broken. This isn't really capitalism; it's crony capitalism. But the system is broken, and we do need to fix the system. But the way we need to go is back to sound money, not socialism, because socialism is going to only make it worse, much worse and quickly. I mean, there are no examples of socialism working. I mean, you want to look at socialism, go to Venezuela, go to Cuba, go to Zimbabwe. I mean, socialism just does not work. So, but, they spin a nice tale. And I suspect in 4 years or 3.5 years that the blue team is going to be offering, stimmies and goodies and checks and forgiveness of debt and all the kinds of things to quote unquote help the people. And all it's going to do is push up the price of groceries.
Mm-hmm. Yeah, it's going to be an interesting one, mate, because obviously, Trump has 3 years right left at this point, and that's it. It's going to be, it might be same party, but it's going to certainly be different person, unless, of course, they change the laws again. And you just never know. You just never know. This is the problem with centralized powers.
Yeah, absolutely. I mean, yes, that is the problem with centralized powers. And this is why, as Bitcoiners, this is why self-custody really starts to become important, because, if they decide they want to take my FBTC, which is in my IRA account, because I haven't taken the time to move my IRA into self-directed, fine, that's a small piece of what I own. But the coins I own in, my head, who says I have to be an American? Who says, I haven't lost those keys? The Jason Lowry thesis that this thing makes individuals as powerful as an army with respect to protecting wealth. It's a pretty interesting thesis.
Yeah. All right, Larry, we've done the past and we've touched on what's going on right now. You kind of said something about the future that you're going to start pulling back and enjoying retirement. But what are you working on at the moment in Bitcoin? You still managing a fund?
Yeah, so I still have a fund that has a piece of its Bitcoin. It was originally a gold and silver mining stock fund and still is. And all my investors are relying on me to deliver them good results, and I'm going to do that, I believe. It has a slice of Bitcoin, about as much as I could justify. And even when I did that, some of them left me and said, "Well, I'm not doing that if you're doing Bitcoin." And I understand that. And I will be wrapping that up sometime in the next several years, as this gold stock bull kind of continues. I think I'll be in a position to say, "Hey, everybody's made good money, and time to unwind that." I'm involved with the Bitcoin Opportunity Fund, which is James Lavish, David Foley, Mark Moss, myself, and I'm not really active there. I'm more of an advisor, and they're doing a lot of very interesting Bitcoin venture deals. Are doing some of these treasury companies where we get in cheap before they do their IPO, etc. I'm trying to promote the book. I mean, I think, to me, look, the book's been successful. I'm approaching 35,000 copies sold. Which is great. I've been told that's a big number for a new book self-published on Amazon. It's been out 5 months or something. But, to me, what I really hope, Prince, is I really want to jump the chasm into widespread adoption. You know what I mean? I mean, there are 300 million people in the United States. I mean, Morgan Housel sold 6 million copies of The Psychology of Money. I mean, and so my dream is that, I don't know, Elon or Tucker or Rogan or Jack Mahler. I mean, just that some high level people who have a big audience read it and go, "Oh my God, this is something everybody's got to read." And it gets viral. It gets really viral, and we got thousands of people reading it and millions of people aware of it, and we truly get a sound money army, marching around trying to fix this broken system, voting for guys like Thomas Massey, etc. So that's kind of, and I will do anything I can to advance that cause in the next few years. I mean, that's why I'm doing pods, and I'll go to events that I think push that forward. But and then after that, I tend to kind of slow down and just not be as involved. And my wife she claims, she at one point in this whole process, she said, I feel like a book widow. Because there was a time when I wrote it, in the 6 months that I wrote it, I was up at 5 a.m, and I pretty much spent all day writing it. And I was ignoring a lot of other stuff, and I don't want to do that anymore. So I'll be doing other things with my family. So.
Yeah, it gets you, doesn't it? Once you start down these rabbit holes and a new project, yeah, it's
right. I mean, we've all been there. Everybody in Bitcoin has been there, where you're just flat out and it's absorbing all you got, and that's great, but you can't do that forever.
Another thing that you tweet about, which I don't know, I don't think I've ever heard you talk about on a podcast, is your fitness regime, your love of CrossFit.
Yeah.
So what's how long you been doing that, and what keeps you going back for the torture?
Yeah, it is torture at times. But it's a short form of torture. It's generally 15 minutes or less. So I started this over 10 years ago, probably approaching 15 years ago. I don't know the exact date, but anyway. And there's a book I highly recommend. So if you're 50 years old and you haven't read Younger Next Year by Crowley, you need to read this book. Okay, Younger Next Year. It's a seminal book. It's really important. And what it talks about is how, when you get to be 50, you really start to age more rapidly. And if you do not commit to a regime of health and exercise, the outcome, when you turn 75, say, pick a number, or 80, whatever, if you've committed to a healthy lifestyle, you're going to look one way. And if you haven't, you're going to look another. And the difference is going to be really substantial. And so, you've got to do the best you can to change your mindset. Men particularly have a mindset, I've got to work and earn money and provide for my family. And that's their highest priority, as you're young and you're growing and you're thinking, okay, that's what I got to do. But when you get to be 50, you got to kind of shift your mindset a little bit. Say, my number one priority is to keep myself healthy so that I'm healthy at 80 or 90. We've all seen 70, 80, 90-year-olds who are very unhealthy. And the difference in your lifestyle is huge. So what it requires is kind of a commitment to every day doing something that's related to fitness. Now, when I started down that road, I started researching it, and I discovered that, like everything else, I'm a type A. I thought, well, okay, I want to get fit. Let's get extremely fit. Well, I looked at what Navy SEALs do, and Navy SEALs were doing CrossFit. And so I went to this Navy SEAL training program run by this guy named Mark Devine. It was really cool. He beat the shit out of me, but it got me kind of into CrossFit. And what CrossFit is, the unique insight related to CrossFit is that if you can push yourself to your max for a very brief period of time, you don't have to do it for long. The body remembers that, and it triggers a bunch of hormones. And so think back to the days when we were running around with spears and animals were trying to kill us. Tigers were trying. You didn't have to be strong all the time, but you had to be incredibly strong for short sprints. And so it's called high intensity interval training. And so CrossFit is like you go all out for 3 minutes, 5 minutes, 8 minutes, 15 minutes. You go as hard as you possibly can, and then you fall on the ground like a pile of sweat. And it kind of sucks when you're doing it, to be frank. Although, as my original coach said, it's like holding your head underwater. Eventually, you kind of get used to it, and you do. Eventually, it's just like, okay, I know this is going to suck, but I'm just going to do it. And, but when you go at 100%, you're going to, human growth hormone, testosterone, you're going to fire a bunch of hormones that you just can't get by going out and jogging. Jogging for an hour is great, and it's going to help build your cardio base, and that's a great form of exercise, but it's not the same as 100% effort for a brief period. And so to me, that's the magic of HIIT and CrossFit. Famous people do it. I'm always amused. I've listened to a lot of stuff by Mick Jagger, who's kind of a hero of mine. He's a cool guy, and he's doing it. He's doing CrossFit. He says, this is the only way I can stay in shape to do these tours at this age. And, God knows how his bandmates are doing it. I don't get it, but they're doing it. So anyway, and so I, probably somewhat, I don't know. I post my workouts just to kind of say, hey, look, this is what is possible to do as a 68-year-old. Doesn't matter where you start. You can get to a point where you're fit and healthy no matter what your age is. And I just think it's another form of proof of work. And I got into it. I think your daughter asked me what was the roughest time of my period, worst investment. Well, it's gold in 2015. That was about the time I got into it. So it was about. I was into it a little before that, but that was when I really ramped it up. So that's 10 years ago now. And, I just figured, shit, I got to be around to see the end of this game. And if I'm going to do that, I got to be really fit to make it to 70, 80, 90. My dad died when he was 73, and I don't want that to happen. So, and I really want to see a Bitcoin driven world. And so I'm kind of aiming for 90. I don't know if that's realistic. If cancer doesn't come into the picture, I hope I can get there. So.
Yeah, you'll make it, mate. Come on, aim for 100.
So.
We need you around.
So. Yeah, well, I'm hoping for that too. But I think my observation from watching those around me age is that after 90, you're often getting close to being on borrowed time. So.
I go to I found the local gym here at the rugby club, and I go along to that, and I'm inspired by the people. I was working out with a 58-year-old guy yesterday, so he only 10 years older than me, but there's a guy there that's 90. He comes along to the gym.
Right.
And there's other guys like in their 70s, in their 80s. And it's like, right, you guys are my inspiration.
Well, that's right. And isn't it, as you look at those guys, aren't some of them really fit? And you're like, wow, that's great. You can do it. The difference between a fit 70-year-old or a fit 80-year-old and an unfit, it's like night and day. But there really is no shortcut. And the other thing I would say that's really important is it's not about measuring it. It's not about performance. So many people get in their head and they're like, well, I'm no good. I'm not going to do this. No. There's only one prerequisite for this thing, and that's to keep walking through the fucking door. Okay? In other words, that's what my first CrossFit coach told me. I said, I'm out of shape. I was fat when I went in there. I was really out of shape. I said, I'm not sure I can do this. He says, yes, you can. He said, the only thing you got to do is you got to walk through that fucking door 5 days a week. and do the best you can, even if it's nothing or something really light, you'll do something because that something will move the needle a little bit. And then what happens is as the needle starts to move, you start to feel good, say, gosh, I could do a little more. And before you know, it's like a flywheel, right? And you get it going, and then pretty soon you're doing stuff you didn't even think you could ever do. So
And
highly
that's
recommend it. If you're 40, 50 years old, you got to shift your mindset. I mean, 20s and 30s, you're on free time. You know, your body's strong. You can screw around, do whatever. I mean, the other thing that related to that I did was in my mid 30s, I stopped drinking, and that's helped a lot. So,
wow,
yeah.
good for you. That's
Yeah, it's poison. It's really, as Max says, it's a shit coin. Alcohol is a shit coin. And Max, Max, as everyone knows, he's been in AA and he was an alcoholic, and he hasn't, same age, he quit too.
yeah.
And I probably would have, that's where I would have gone if I hadn't quit, and I'm glad I did.
Wow, good for you, mate.
Yeah.
All right, Larry, let's wrap it up because what are we now? Yeah, hour and 10 minutes. I've got to hit you with the last question.
Sure.
If you had one last orange pill left to give to somebody, who would you give that to and why?
I'd probably give it to Elon. And not because I'm a lover of all things Elon. I'm not. I mean, he's got some great qualities and he's flawed in other ways, but he's very, very influential, and he's very, very well known, and he's probably got more Twitter followers than anybody else. And I think he's so close to fully understanding it. And I think if he were to fully understand it and to embrace it in his businesses and to kind of adopt a sailor-like strategy, boy, it would just be, I mean, it would force Apple and all these other corporations to think about it. And I think it would move the world. So I think he would be a very highly leveraged, orange pill, if, based on the platform and the followers and that he could connect with. So I'm pretty sure I'd give it to him.
All right. Well, there is no wrong answer, so don't sweat.
Yeah.
It's
I'd be curious. I mean, if same question to you in the same circumstances, who would you give it to?
Yeah, I've gone back and forth on this one a lot. I used to say Greta. I would like to have given it to Greta, so she can undo the damage that she's done with all of the climate fear mongering to young teenage kids. That would, yeah. But now I lean more towards just keeping it as close as I possibly can. My parents, for example, I've given them the books. I've not given them your one yet, but they've had others, and they come back with questions. They've watched Joe Bryan's "What's the Problem," and then they come back with questions. So it's just a slow burn, and yeah, I mean, everybody gets there eventually, and we all know it's inevitable. This mindset shift that we have to go through, because if you don't, then what's the alternative? The alternative is just to carry on living in this world where you are being manipulated, and there is no economic signal, and you can't make true decisions, and you're going to get pulled into all kinds of wrong areas of life and end up living a life that you were never intended to live. Like it's because everything is downstream of money, as you've explained in your book, as Seb explains Seb's book, The Hidden Cost of Money. That's another great one.
Fabulous book. I love Seb's book. Yeah. Yeah, Joe Bryan, fabulous. I mean, he just put his his video, he turned it into a free ebook too, and it was just out. I just retweeted it. It's highly recommended. So yeah, I mean, look, it's just one soul at a time, right? I mean, I got a nice DM the other day. It's on my thread on Twitter where a young kid out in LA, said, "Hey, I saw you on Robert's show, and I really appreciate what you're doing, and feel like you want to send me a book. The people I live with could definitely use it." And he's in a rough area of LA, and I was like, "Yeah, I'm sending you a box. Spread them around." I mean, because this is, look, it's a good idea, and good ideas spread, mouth to mouth, hand to hand, friend to friend. Hey, have you read this yet? Have you thought about this? I mean, and but it's happening. It's coming along.
I forgot to ask, where will you be signing more copies? Have you got anything lined up?
Yes, that's great. That's a very good question. So books, events, I know I'm not going to be going to the bigger shows as much anymore, if at all. There's a show down in Dallas that I was invited to by Robert Kiyosaki called Limitless. It's late July, early August. So I have a bunch of books there, and I will be signing, and I think I'm on a panel there. There's a show up in Montreal in Canada. I'm not sure the exact dates. You can Google Bitcoin Canada, Montreal. I want to say it's Octoberish kind of time frame. And so I will go to that. I'll be signing books there. I haven't committed to any other shows, but I might. I don't know what else is coming up. I don't know if I'll go to Prague next year. I know when Madeira gets thrown again, I'll definitely go back to that.
That's 2028. People, put it in your diary. Yeah, March
little ways,
2028.
little ways out, but I'm definitely going to that. And
Yeah, us too.
yeah, so on Twitter, I always talk about, where I'm going, what shows I'm going to.
So follow Larry on Twitter, everybody, and reach out in his DMs if you have any questions.
Yeah, yeah. Really great talking to you, Prince. It's been a long time since that discussion about Sam Bankman-Fried. The years they just slide by quickly, don't they?
They certainly do, mate. They certainly do.
Yeah.
Well, thanks for coming on. Thanks for everything you have done in the past and continue to do for Bitcoin.
Well, thank you for helping spread the word for your pod and your shows. I love them. They're excellent. And when you get this done, let me know, and I'll retweet it to those folks who follow me so we can spread the word.
Will do. Thanks, Larry. Have a good day.
You too. Take care.